All right, crypto bros. I know a lot of you are scared because we've been dumping the last few days, especially for some of the altcoins. But I'm here to tell you that we're almost there and you do need to hang on at this point. Yes, Binance and the other market makers might be trying to shake you out, but let's actually take a look at the chart to see where we actually are despite the shakeout. We've had a lot of ups and downs, but if you look at the chart, like the last time we had a shakeout, we went all the way down to 107, and the time before that, we went down to 97. So each shakeout, the low is getting higher. Now, we haven't gone up past 125, but I think the next step up will actually be above 125. And remember, the time before that here, we were only at 111, and it took from May all the way until August, 3 months for us to get to really like new all-time highs, or at least from May until maybe about July. So 2 months, and it hasn't been 2 months. And 2 months aligns with October, which is after the ETFs come through. So the next step up should be well past 135. So so we are almost there, everyone. And there's really good news on the horizon too. If you look at this, E-Trade has actually added Bitcoin, Ether, and Solana in expansion, and E-Trade has over 5 million users. It's one of the most popular trading platforms out there. And this is actually pretty big news for crypto because it's another step in taking crypto mainstream. So when it does run, people will be able to buy them easier on E-Trade. Now, obviously, you can buy it pretty easy on Coinbase and other exchanges, but this is a whole new kind of like class of investor that could possibly buy from E-Trade. So E-Trade will let clients trade Bitcoin, Ether, and Solana in 2026, marking Morgan Stanley's entry into crypto with zero hash support. So Morgan Stanley's E-Trade will launch cryptocurrency trading in 2026 through a partnership with digital asset infrastructure provider Zero Hash, underscoring Wall Street's deepening push into digital assets amid a wave of supportive legislation from Trump's administration. Now, this is another just one of those reasons why we are almost there. It's all coming together, everyone. Like E-Trade accepting us, the basically the digital asset reserves, and all the adoption from institutional investors. So the announcement confirms a May 1st Bloomberg report that the brokerage planned to add crypto trading next year. At the time, Cointelegraph reported that the initiative was still in early stages as E-Trade sought partnerships with infrastructure providers. E-Trade was acquired by Morgan Stanley in 2020 for $13 billion. At the time of the deal, the discount brokerage had more than 5.2 million users and offered a retail-focused platform for trading regulated financial securities, focused mainly on U.S. residents. Zero Hash is not a household name in crypto, but Fortune reported Tuesday that it raised $104 million at a $1 billion valuation in a round led by Interactive Brokers. The company provides crypto trading, tokenization, and stablecoin infrastructure for financial institutions and other blockchain adopters. Morgan Stanley also participated in the funding round. So they acquired E-Trade a while ago. They're making very bullish moves into crypto. I think with E-Trade coming in, other trading platforms will also follow, and that'll give us access into tens of millions of new U.S. investors, which is a lot of money. So just another big crypto bullish thing that is actually happening. And that just shows you that more and more institutions are eyeing crypto expansion. And more than that, the SEC chair, Paul Atkins, is eyeing an innovation exemption to fast-track digital asset products. So he wants to let these digital asset companies to hurry up and build. That will be very bullish for the crypto market as well. So SEC Chair Paul Atkins said he will push an innovation exemption by year's end to let crypto companies roll out products without outdated regulatory hurdles. So he's going to change the regulations altogether. Remember, Ginzer wanted to regulate crypto by security standards. So he's going to push out a set of regulations, which will probably be very lenient and lax for crypto. And that, my friends, will definitely be helpful for companies that want to deal with crypto make inways. So the US SEC is working to create an innovation exemption that would ease approval of digital asset products by the end of the year, SEC Chair Paul Atkins said on Tuesday. During an interview on Fox Business, Atkins told anchor Maria Bartiromo that the SEC is working on rulemaking in the coming months. An innovation exemption would function as a regulatory carve-out, giving crypto companies temporary relief from older security rules to roll out new products under lighter oversight while SEC develops tailored regulations. Atkins addressed a question about the recent approval of the first multi-asset crypto exchange-traded products in the United States. Launched on Friday, the product gives investors access to Bitcoin, Ether, XRP, Solana, and Cardano. Grayscale's crypto fund launched under SEC's recently announced generic listing standards, which reduce approval timelines for ETFs under Rule 6C11. According to Atkins, the new listing standards are another example of how we can move forward. It's not just an ad hoc type of approach. We are trying to give the marketplace some kind of platform upon which they can introduce new products. So they are advocating for easier policies, easier regulations, and they are advocating for crypto innovation. That obviously, that might result in a lot of like rug pull companies, but that will also allow legitimate companies to actually function without any kind of disturbances in crypto, which overall I believe is positive for the industry. And Solana is going to be the one that probably gains the most from this. So like there are people that want to tokenize NASDAQ shares on Solana companies. So basically Solana is going to be used for RWA tokenization on the stock market. And that's another big step forward for innovation in crypto. It's called Forward Industries. Forward Industries plans to tokenize its shares to allow users to utilize them as collateral within Solana's DeFi lending ecosystem. So people are going to be able to use stock shares via blockchain and Solana as collateral for lending and borrowing, and that could be a whole new market that essentially opens up. Forward Industries, the NASDAQ-listed company holding the largest corporate Solana treasury, wants to bring up its own equity to the blockchain on Monday, and this is more like institutional big adoption that can actually drive utility and usage of cryptos to where they're actually going to be worth maybe somewhat more. I can't really promise like how much more, or it's going to be like a big blow up or anything, but it's possible that it can be worth somewhat more, because if a lot of industries tokenize like this on Solana, that is a significant number of transactions. On Monday, the company announced a partnership with fintech firm Superstate to tokenize Forward Industries stock on Solana. Now, Forward Industries, the symbol is Ford, that is not the car company. Through Solana, through Superstate's opening bell, a regulated on-chain issuance platform that lets public companies tokenize equity on Solana. If the plan moves forward, shareholders will be able to bridge their common stock between brokerage accounts in Solana, potentially unlocking 24/7 trading, near instant settlement, and new pools of global liquidity. While the plan seems a big move forward, the company has not yet disclosed whether regulators have signed off on tokenized shares or if it's still in the planning stage. Cointelegraph contacted Forward Industry for more information, but has not received a response by publication. So you're looking at big new use cases for crypto, RWE, obviously, in this case, SOL. So all these things are reasons why we're almost there. They're all kind of coming together at the same time. We have Trump basically trying to hurry along the U.S. lawmakers to get that crypto treasury, or at least Bitcoin treasury, in action. It's going to be a Bitcoin treasury, by the way. You have Paul Atkins, the SEC chair, pushing for lenient regulations and trying to get an innovation exemption, which will definitely help crypto and crypto-based companies. You basically have E-Trade, one of the largest trading platforms out there, basically adopting crypto, and obviously Bitcoin, Ether, and Solana. Once again, Solana being the smallest of the three is probably going to have the most effect on Solana. And you have people wanting to tokenize in Solana, and that will probably be filtered through to other chains as well. So, there's so much happening, and the dump, like I said, on the charts isn't really that extreme. People are acting like, it's worse than the 71K dump. It's really not. Yes, we went up to 123, and now we're back down to 111 or 112. But remember, just a month ago, we went to 107, then we went back up to 117, and now we're at 111 again. We had the same kind of movement here after we went up to 112, then went down to 97, and then we basically waddled around for 2 months before we actually went up again. And we're kind of in that time period where we basically reached the top in August, mid-August 25, and then we're kind of just waddling around right now, and it's been a little bit more than a month. So another half month or so, around the time those ETFs come through, we should go for a newer high. And to me, there's very little signal of us actually going down. If you look at the 50 MA, it did start to curve downward on August 27th, but it's kind of flattened out. So it's not like this kind where it continues to go downward for like 2 whole months. It kind of like went kind of downward for like, I would say half a month, and now it's kind of like starting to curve back up. Yes, we are still below the 50 MA, but I'm really not all that worried because I think we will actually recover to be about above 115, and then like, you know, the 50 MA will be above the 50 MA again. It's very, very different from in February, where when we started to go down, like we basically went straight down for 2 months without like really any chance of coming back up. And obviously the 50 MA crossed below the 200. Right now, we are already curving on the backswing, and we're not going down nearly as hard on the charts as where we were in February when we went down from 109 to about $74,000. So I don't really see that kind of a dump, and I definitely see like 124 to 112, to 107, 112 be kind of the bottom there, and that is only like a 10-15% dump max. And I think we are really adjusting on that timeline. Realistically, we're definitely adjusting on that timeline where we actually are going to a new all-time high before we dump, before like, we can go down to like 80 something or 70 something, or something that would actually get us very, very worried. Powell did issue a couple of warning signals. He says like there's hard times ahead, but I do think that will probably be after the run. I think the CPI only really has to hold for like a month or two more for us to really get that run. And I definitely think that we are going to get another boost once Trump's guy gets appointed to the Fed chairman position. He'll slash the interest rates like crazy. I think that will get us like another kind of like run before it all just basically tumbles down and kind of like goes into oblivion because he cut the rates too much and inflation really kicks back up. I don't really know if the tariffs are going to be illegal or not. I really hope they do get declared illegal, but because that will help the crypto market as well. And that might actually not have us have the catastrophic collapse post like the massive rate cut next year, because I think like if we don't have the tariffs, people will just feel a lot better, and we might have a really nice like 6 or 7 years like we did all the way from like essentially 2010, or not 2010, like 2011, all the way through like 2019. And that's really what I'm hoping for. But in the midterm, or in shorter midterm, I definitely think the fact that the SEC is like fast tracking innovation expansion, which mainly pertains to crypto and digital assets, people wanting to RW everything on crypto chains, and also essentially E-Trade, more or less like adding crypto onto their platform, is really, really going to help cryptocurrencies and the crypto market. And I think we are almost there. I think we're just at most like a month and a half away. So hang on, people, hang on. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.